Welcome back, D-traders. Let's discuss the prospects of a new trading day on Wall Street. The market opened on Monday without any surprise. The stock market printed notable gains yesterday. The major stock indexes recovered and stepped aside from the abyss. However, the gains could be negated today. The US stock market opened a new week on an optimistic note. The Dow Jones closed 2% up, the Nasdaq climbed 1.9% intraday, and the S&P 500 rose 1.6% to close at 3,974 points. The pre-market today suggests a downward reversal. Wall Street indexes are declining 0.7% and 1.7%. The information background is mixed. The highlight of the day is a speech by Jerome Powell. Amid higher volatility on Wall Street and investors' fears, the S&P 500 is expected to trade in a wide corridor between 3,840 and 4,010 points today. Following a turbulent week, the stock market perked up on the back of the empty economic calendar on Monday. JP Morgan CEO calmed down investors by a red-hot forecast. He expects the net interest income to expand to $56 billion in 2022. Inflation risks are escalating but could ebb away thanks to robust consumption. In the light of this optimistic message, JP Morgan stock rallied 6.2%. Other high-tech giants such as Apple, Microsoft, Tesla, Amazon and Meta closed mixed yesterday. And today the news from a snapshot overshadowed market sentiment. Its stock slumped 29.1% in the pre-market, dragging down the Nasdaq, which shed 1.62%. Besides, BlackRock, one of the world's largest asset management companies, downgraded the US stock market's rank to the neutral level. The reason is the Fed's hawkish rhetoric and the lack of catalysts for a recovery. Wall Street will find it hard to rebound, and today market sentiment will depend on a speech by Jerome Powell tonight. The US dollar also turned sour. Its index slipped another 0.2% on Monday and touched 101.80, the lowest level in 1 month. Later on, the index bounced off this level. It's now hovering at around 102. Analysts predict a further correction for the US dollar index that is likely to trade in the corridor between 101.60 and 102.10. The index is going down in a tandem with the yields of US Treasuries. Investors are anticipating a slowdown in inflation in the United States, and they have a faint hope for the Fed's dovish policy decision in July. The regulator might soften its rhetoric due to some snags in the labor market. In a fresh report on new home sales, the actual reading fell short of market expectations. The Commerce Department reported that new home sales contracted 8.6% from a month ago to 763,000 units, undershooting the forecast for 765,000 units. Besides, the median cost increased significantly. Apart from weakness in the housing market, the US dollar strength was dented by ECB President Christine Lagarde. The policymaker stated that the regulator has come to a turning point following 8 years of negative interest rates and a massive monetary stimulus. She added that the ECB intends to wind down its asset purchases in early July to set the stage for the first rate hike shortly after. The hawkish rhetoric of the ECB leader pushed yields of government bonds up. Moreover, the euro jumped to 1 month's highs against the US dollar, so traders will be reweighted to Powell's speech tonight and the minutes of the Fed's meeting in May. The USD CAD pace is trading quietly with minor fluctuations. The price has got stuck at around 1.2800, and the currency pace set to trade in the range between 1.2700 and 1.2820 before the comments by the Fed's chairman. The Canadian dollar is lagging behind its American rival. The market has already priced in another rate hike by the Bank of Canada at the policy meeting next week. Inflation accelerated in April faster than expected to an annual rate of 6.8%, the highest score in the last 31 years. So the regulator is determined to carry on with the countermeasures. As for the business climate, 6 major Canadian banks expect their profits to decline 12% on average in the second quarter due to swelling spending on credit losses and growing credit service costs on the back of higher interest rates. As for oil prices, they are shaped by two opposite factors. On the one hand, oil prices are affected by the risk of a slowdown in the global economy. On the other hand, the oil market awaits beyond energy demand. Brent crude slipped 0.13% to trade at $113.27 a barrel. WTI is trading at $110.15, having shed 0.14%. Despite a modest risk appetite in the stock market, the crypto market is extending its bear trend. Bitcoin has lost almost 3% in the last 24 hours and now trading at $29,300. Crypto investors have lost faith in the digital tokens after a crash in stablecoins and the sharp depreciation in Luna. The active promotion of crypto assets in Davos has not enhanced the image of the crypto market. Besides, digital tokens have been again targeted by monetary authorities. ECB President Christine Lagarde roasted cryptocurrencies, saying that they are worthless and should be regulated to protect their holders from the erosion of their savings. After such attacks, the crypto market needs serious drivers for growth. For example, the Fed's dovish tone. The expected carry for Bitcoin is seen between $28,500 and $29,900. To sum up, the stock market could face more selling unless the Fed's chairman encourages stock investors with a glimmer of hope. Meanwhile, investors are unnerved by global headwinds. They are braced for another highly volatile session. Trade prudently with the InstaForex and see you tomorrow.